Most real estate YouTubers only talk about how they get in, how they found the deal, how they financed it, how they renovated it, but almost no one talks about how it ends, how they'll exit, what their vision looks like 5, 10, or 20 years from now. But if I'm risking $100,000, I need to know where this is going. And that's what today's episode is about. My exit plan, my long-term wealth strategy, and the exact rules I'm setting now, so I don't get lost chasing shiny objects later. Why you need an exit plan before you even start. Imagine climbing a mountain with no idea what's at the top. That's how most investors operate. They get a property, then another, but they never stop to ask, what's the point of all this? For me, the point isn't just to own real estate. The point is to buy my freedom, to create time, to give my family options, not just more stuff, and to build something that can outlive me. So my exit plan isn't just about money. It's about meaning. And you can't outsource that. You have to define it for yourself. What I want from this 100K, let's zoom in before we zoom out. Right now, I'm turning $100,000 into a portfolio of cash-flowing real estate. My short-term goal? $500 a month in positive cash flow. 15 to 20% total annual return, cash flow plus equity plus tax benefits. Ability to refinance in 3-5 years and recycle capital. If I hit those metrics, I don't just have a property. I have a repeatable model. And that's the key. Because once the model works, scaling becomes easier. But here's the twist. I don't want 100 properties. I want 10 perfect ones. Phase 1. Foundation portfolio. Years 1 to 3. My first 3 years are all about small multifamily properties, duplexes, triplexes, fourplexes, value add with light rehab, stable working-class tenants, landlord-friendly states, self-managed or hybrid managed for tight control, financing with 25% down, 30-year fixed loan. By year 3, I aim to hold 4 to 6 properties, 10 to 15 total units, $1,500 to £2,000 a month in cash flow, 100 cows in equity. This is my base camp, where the snowball starts rolling. Phase 2. The equity snowball, years 4 to 7. Once the base is built, I'll use equity extraction to scale. How? Through refinance and redeploy. Example. Property bought for $170K, now worth $220K. Loan paid down to $120K. I refinance at 75% LTV equals $165K. Pull out $45K tax-free. Use that for the next down payment. Repeat this across multiple properties, and you create a cash flow chain reaction. Each one funds the next. The trick is to stay disciplined. Only refinance if cash flow remains strong. Never over-leverage. Stick to boring markets and stable tenants. By year 7, the goal is 20 to 25 units, $4,000 a month in cash flow, $250K plus net worth from real estate. At that level, you're free from most day jobs. Phase 3. Exit flexibility, years 8 to 10. Once I cross the 20-unit mark, I'm not just building income, I'm building options. At this stage, I'll have multiple exit paths. Option 1, hold forever. Keep all properties live on the cash flow and pass them to my kids. Option 2, sell the whole portfolio package, the properties, and sell to a larger investor or 1031 buyer. Use proceeds to buy fewer, larger properties, switch to passive investing, or invest in a business, trust, or private equity. Option 3, refinance again, pull out more equity, pay zero taxes, and still keep ownership. Use funds for lifestyle upgrades, kids' education, launching new ventures. The point is, the assets give you control, not just income. What I will not do. This is just as important as the strategy. Here's what I'm avoiding: chasing appreciation-only markets, over-leveraging just to scale fast, buying low cash flow luxury rentals, entering Airbnb or short-term rentals, investing in states with hostile tenant laws, hiring poor property managers for convenience. Because in real estate, avoiding mistakes often matters more than finding home runs. The books that shaped my exit plan. Affiliate links below. These books helped build my mental model. The Millionaire Real Estate Investor by Gary Keller. https://AMZN2-3HNFMQPE. Buy, Rehab, Rent, Refinance, Repeat by David Greene. https://AMZN2-3VC4DTW. Your Money or Your Life by Vicki. Die with Zero by Bill Perkins. These are not hype books. They're frameworks for sustainable wealth, and they've shaped how I think about freedom. My non-negotiables going forward. As I keep building, these are the rules I won't break. Every deal must cash flow. Every market must pass my 6-point system. Every property must have an exit strategy. Every year I review my numbers. Every 3 years I reassess my plan. If something violates these, I don't care how good it looks on Instagram. I walk away. So how does this end? It ends with freedom. Freedom to work or not work. Freedom to live where I want. Freedom to spend time with my kids, not trading time for money. Freedom to create, travel, serve, or just be. That's the end game. Not some huge mansion, not 10 Lambos, just time, peace, and ownership of my life. And it starts with this first 100K. If you're on the same path, here's what I'd tell you. Start with one deal. Make it count, then stack your wins. This isn't about going viral. It's about going far. And when you build with purpose, every brick matters. This is Dropout Investor. No fluff, no guru talk, just real money, real mistakes, and a real plan to build wealth. One smart decision at a time. Subscribe to follow my journey from 100K to financial freedom. Drop a comment. What's your endgame? Tools, books, and affiliate gear below in the description. And if you haven't watched episode 4, How I'm Preparing for Risk, that's the one I wish someone showed me 5 years ago. Go watch it next. See you in the next one.